We're seeing another triple-digit rally in the Dow. Alan, I was speaking to some traders today who were not believing this rally, waiting for a pullback. Are you on that camp?
Not at all. I think if you look at the short positions, the NASDAQ has 5% shorts, New York Stock Exchange has 9% shorts. Those are big positions. And the fact that we're up 1,000 points in the Dow alone, about 100 points in the S&P, indicates last day of the month, you're going to see a lot of short covering. I mean, the first 3 days of new month, new money comes into the market. Shorts know that. You'll probably see this rally continue tomorrow also.
But that's just a short-term rally, right? I mean, fundamentally, what are you seeing that would support any kind of rally? I mean, we did get better than expected ADP employment data, right? We got better than expected factory orders and Chicago PMI. How does that bode?
Well, you know, if you look at it from a QE3 perspective, it doesn't bode too well. But I think in the long run, I think the numbers, now Friday's going to be the big number, the big enchilada. I mean, if that number's negative, then you're going to see that QE3 talk. QE3 is going to rally this market like it did on QE1 and QE2. So I think you hold, you stay dry, keep your powder dry till Friday, and then watch what happens.
Do you think that any possible QE3 is already being priced in, or is it purely just technical at this point?
Well, you know, yesterday's talk from the Feds indicated that maybe they're leaning towards a kind of QE3. But again, I think Bernanke has told us numerous times it's going to be the data. Inflation's basically where they want it at 2%, give or take. But I think it's that jobs number that's going to push them over the top. But again, QE3 doesn't create jobs, which is a shame. It only rallies the market.
So it's really going to be about Friday's jobs number. What are you expecting?
Well, you know, some people, I mean, ADP 91,000. A little under 100,000. They've been men's and men's in the last few months, but I think Friday, if you see under 100,000, that's a great number. But if it's much over, I think that's going to be the problem.
Over 100,000 in terms of private hiring, or so if it's over 100,000, that's a good thing for the markets, but bad for QE3, and then vice versa.
Exactly. So that's exactly it's a reversal. So that's what you're going to see happen.
And then I heard on Monday from a trader that you were seeing some rotation into utilities and dividends of the like. Are you still seeing that right now, or are we seeing more cyclical trends start to pick up?
No, you're right. We are seeing that. You know, people want to be safe. In these times, I mean, last month, August, normally a very quiet month here on the floor. September, the busiest and most convoluted month out of the year. But last month in August, we had 10,000 points intraday swings the whole month, which is insane. I've never seen a month where we've had those kind of swings. So I think that volatility is going to stay, but yet for the average person, it's like, get me out, get me somewhere safe, and that's why you're seeing that go into utilities that pay a nice dividend. I mean, some of these guys are paying 8% dividends. Some of these other big utilities, some of these gas companies have raised their dividend every year for the last 33 to 55 years. They're safe bets in these type of environments, and that's what you're seeing.
All right, thanks, Alan. I appreciate it. Safety is still the name of the game. Investors really looking at Friday's jobs number. Watch the private number. 100,000 is key.